Stock indices provide a snapshot of the financial markets by tracking the performance of select groups of stocks. They help investors assess market trends, measure economic health, and make informed investment decisions. The U.S. has several key stock indices, each serving a unique purpose. Here are the 10 most important U.S. stock indices and what they mean. 1. Dow Jones Industrial Average, DJIA. The DJIA, commonly called the Dow, tracks 30 large, blue-chip companies across various industries. It is one of the oldest and most widely recognized indices, offering insight into the overall health of the U.S. economy. 2. S&P 500. The S&P 500 includes 500 of the largest publicly traded companies in the U.S., making it a broader market indicator than the Dow. It is often used as a benchmark for the overall stock market and is favored by investors tracking long-term performance. 3. Nasdaq Composite. The Nasdaq Composite mainly represents technology and growth stocks, including giants like Apple, Microsoft, and Tesla. It is heavily weighted toward the tech sector, making it a key index for tracking innovation-driven industries. 4. Russell 2000. The Russell 2000 tracks 2,000 small-cap companies, providing insight into the performance of smaller businesses. It is a useful indicator of economic growth and market sentiment toward emerging companies. 5. Nasdaq 100. Unlike the broader Nasdaq Composite, the Nasdaq 100 focuses on the 100 largest non-financial companies listed on the Nasdaq exchange. It is dominated by tech and biotech firms, making it a favorite for investors seeking exposure to high-growth industries. 6. Wilshire 5000. The Wilshire 5000 is one of the broadest indices, covering nearly all publicly traded U.S. stocks. It is often referred to as the Total Stock Market Index, and provides a comprehensive view of market performance. 7. S&P 400 Midcap Index. The S&P 400 tracks mid-sized companies, filling the gap between the large-cap S&P 500 and the small-cap Russell 2000. It helps investors analyze the performance of mid-tier businesses, which often have strong growth potential. 8. Dow Jones Transportation Average, DJTA. The DJTA tracks major transportation companies, including airlines, railroads, and trucking firms. It is often used as an economic indicator, as transportation activity tends to rise and fall with overall economic conditions. 9. CBOE Volatility Index, VIX. The VIX, also called the Fear Index, measures expected stock market volatility. A high VIX indicates market uncertainty, while a low VIX suggests stability. Investors use it to gauge market sentiment and potential risks. 10. S&P 600 Small Cap Index. This index focuses on 600 small-cap companies and is similar to the Russell 2000. It is useful for investors seeking exposure to smaller firms with high growth potential but higher volatility. Understanding these stock indices helps investors make informed decisions and track market trends effectively. Whether investing in large-cap stocks, small businesses, or tech companies, these indices provide valuable insights into different market sectors.